Hi, I'm Jen Beeston. So today I want to talk to you about FHA loans. There's a lot of misconceptions about FHA loans, so I feel like we need to clear that up first. It's not just for first-time home buyers. You can have multiple homes and still use an FHA loan. There's no income limit. FHA loans themselves have no income limits, okay? Now, some of the stuff about FHA that gets misconstrued is the mortgage insurance. So regardless of how much you put down, FHA has mortgage insurance, and you need to understand that. So sometimes when lenders are competing for rate, if someone comes in way lower, they're pitching FHA, even if it doesn't make any sense for the borrower. I actually had this happen to one of my clients where he called me. He's like, hey, they're offering me XYZ on a refinance. And I was like, no way. Ask them if it's FHA. Calls him back. Yeah, it's FHA. He had 50% equity in his property. The lender was going to try to put him in a loan that had mortgage insurance. It's crazy. It's crazy. So what are the good things about FHA? The mortgage insurance annual premium, whenever you're putting down less than 20% or getting an FHA loan, you're going to have mortgage insurance. It's very affordable, especially if you have not great credit. Now, if you have perfect credit, I don't know if FHA is going to be a best choice for you, because I think with a conventional mortgage, you'll be able to get less expensive mortgage insurance. But if your credit score is not great, FHA could save you a ton of money every month. With interest rates, FHA rates are also lower than conventional rates. Okay, so you're like, wow, lower rates and lower mortgage insurance if my credit isn't great. What's bad about it? Okay, so I'm going to tell you what's bad about it, because a lot of lenders gloss over this. So first of all, FHA, they don't care if you put down, 50%, 20%, 30%, 10%. You are going to pay an upfront mortgage insurance premium that gets financed into your loan of 1.75%. Okay, so for the privilege of doing an FHA loan, they're going to tack 1.75% onto your loan balance, no matter what. Even if you have an 800 credit score, that is the way they roll, okay? So that's not great. If you have good credit and you're putting 5% down, we most likely would not be looking at FHA, because the 1.75% is not going to make sense. The other thing that's bad about FHA is that if you're putting down one of the lower down payment options, the mortgage insurance is for the life of the loan. Yeah. Now, look, FHA changes their rules quite a bit. Like over my career, I've seen that 1.75 be higher. I've seen it lower. I've seen the mortgage insurance, be able to be taken off, not be able to taken off. So it can fluctuate for sure. But as of this minute, if you buy a house with FHA with 3.5% down, you will have mortgage insurance unless you refinance out of that loan or you sell that house. Okay. Now, if you're thinking it's a 3-year house, but if it's a 30-year house you plan to live in, that's definitely something you want to consider, because we're in an environment where interest rates are going up. So the odds of you refinancing into a lower rate right now aren't super high. So you want to make sure that your lender is having that conversation with you about, okay, this is why FHA makes sense. This is what a conventional looks like. This is the difference. These are the long-term repercussions of each loan. Okay? You don't want to just have someone go, oh yeah, they qualified me for FHA. Why did they qualify you for FHA? Because unfortunately, government loans are one of the largest profit centers in terms of what lenders and banks make off of loans. They make the most money off of government loans. So you want to make sure that if you're doing a government loan, there's a legitimate reason. And there's a lot of great reasons to do an FHA loan. If you had a short sale or foreclosure, FHA is more forgiving. If your debt to income's higher, FHA is more forgiving. If your credit score is not great, you're going to get a much lower payment with FHA. So there's a lot of positive reasons why you would want to use that loan. You just want to make sure that you know why you're using that loan. Because if you have an 800 credit score and 10% down and nothing derogatory in your past, I don't really know why you would be using it. So I hope this has helped. As always, if you have questions, comments, want to talk about loans, give me a call or shoot me an email. Thanks so much.